we have John Van Limbeek joining us today from Abbott Wealth Management. Merry Christmas to you.
Same to you.
You ready for Christmas?
No.
Yeah, that's
a man's
all right.
answer.
It is a man's answer. You got time.
Yeah,
you got time.
Right. Got a week.
That's right. But you know what? The end of 2015 is not far off. We all think about Christmas, but little do we really think about the fact a week from that is the end of the year. And when it comes to tax time,
yeah, I mean, you're absolutely right. From a tax point of view, everyone's kind of crunching now, or not everybody. A lot of people do that last-minute tax planning when really it should be kind of throughout the year. But there are a couple things, or numerous things that have to be done before the end of the year, to one way or the other kind of thing, right? If you want to use it, take advantage of it, get it done. If you don't, it's okay. You just don't get to use that opportunity kind of thing, right?
Okay, well, let's talk about some of them. There's a few things.
Sure. The first one would be tax loss selling for non-registered accounts. The deadline is December 24th, and you have to have any trades done or before that date to actually physically make it land in the calendar year.
I don't know what tax loss selling is, so
obviously if you have a non-registered investment account, you have sometimes there's investments in there that may not have done well this year, and if you do not want to hold them for 1, 2, 3 years, then a lot of people will sell the bad ones and sell some of their good ones too, and offset that gain. Okay. Right, and take it and basically clear up all from a tax point of view, clear it up in the current year and start anew next year. So you just have to do that in the calendar year, but people usually wait to the end of the year till December and have that done, or get that done in December. And so there's a little bit of a little bit more volatility usually in the month of December, because people are, even though you may not have made money on it, you might sell a security or a company or a stock or something like that, but I might have made money, I want to keep it. So you'll see, like you said, you'll see that volatility a little bit more this month. Okay, so if you still want to do it, you can. You have until the 24th. Yeah, absolutely. Yeah. So a week tomorrow. Yeah. Okay, you can set up a family loan for income splitting. The interest rate, though, 1%. Family loans, it's really the attribution. You can't give money to a spouse or a child for investment purposes. That attribution of income or growth would be attributed back to the person that gave it to the parent, let's say it that way, or to the other spouse. So if you do it the correct way, you'd have to set up a family loan. There's a prescribed interest rate of 1%, which is really low. You have to claim interest or income interest on that loan, but you also get a deduction. So it's so you can do it the legal way, but you can set it up before the year end kind of thing. Okay, good to know. And what about RSPs, converting them to RRIFs by the end of the year? RSPs? Yeah. So age 70, you have to convert your RSP to a RRIF, a Registered Retirement Income Fund, the year you turn 71. Okay, so that's the normal rule. But a lot of people will wait to do their RSP contributions until January, February of next year, with the understanding that I can take that contribution and put it back into this year on my taxes for 2015. You can't do that in that last year. Okay. You have to actually do that RSP contribution before you turn it to a RRIF. Okay. If you think of it that way. Okay, good to know. What else? Keep RRIFs tax sheltered. So the Registered Retirement Income Funds, again, the previous government, federal government, lowered the minimum withdrawal amount for a RRIF and a LIF, if you think of it that way, in the year. You can actually recontribute that difference back to your RRIF basically for the end of February next year, if you don't want to take out that slightly higher amount. Okay. So we can do that. Good to know. What else do we need to know? There's one more tip. Make payments by December 31st. Several deductions and credits rely on payments made in that calendar year. Yeah, so again, back to the calendar year, the tax year kind of thing, anything you do should be done before the end of December this year. Charitable donations, for example, have to be done this year. And there are a couple other credits kind of you just have to make sure they're all done and land in this current calendar year. How quickly it comes around. It does. Right? It always feels like it's tax time to me. Like you said before, it was, before you know it, it'll be end of the year, and here we are into, summer of 2016, really. I know, really. It goes that fast. Yeah, it goes faster as you get older, as we all know. Yeah. Great tips here, and if you want to be organized, it's good to stay on board and keep things in check. So, John, we appreciate you being here today. Thank you. Yeah. Okay. Information on the screen, abbottwealth.com, as well as the phone number, 372-3736. We are back in 2 minutes. Stay with us.